$3 billion. That is the amount of money sitting in short positions directly above where XRP is trading right now. $3 billion of traders who have bet that XRP is going lower. Traders who borrowed XRP they do not own, sold it, and are now waiting for the price to fall further so they can buy it back cheaper and pocket the difference. $3 billion. And here's what you need to understand about those $3 billion. If XRP's price moves up instead of down, every single one of those short sellers has to buy XRP to close their position. Not because they want to, because they are forced to. Because exchanges will liquidate them automatically if their losses get too large. And when $3 billion of forced buying hits a market where available XRP supply is at its lowest level in years, the price does not go up gradually, it goes up violently, extremely fast, in what traders call a short squeeze. On April 5th, yesterday, CryptoQuant analyst Maartunn posted on X. His message was 6 words: "I am betting on a short squeeze," and he attached the data that backs that call. XRP's open interest has climbed from $892 million to $951 million, a 2-week high, while the price was falling. And the funding rate, the number that measures whether traders are net long or net short, turned deeply negative at minus 0.0010. Those two data points together. Rising open interest and deeply negative funding rates create a very specific market structure, one that has preceded some of XRP's most explosive short-term price movements in history. I'm going to explain exactly what this data means in plain language. I am going to show you the historical precedent, and I'm going to tell you exactly why tomorrow, April 8th, could be the catalyst that lights the fuse. Stay with me. This is the most time-sensitive analytical video I have made on this channel. Step 1. What a short squeeze actually is and why it creates such violent price moves. Let me make sure everyone watching understands exactly what is happening here, because short squeezes are one of the most powerful and most misunderstood forces in financial markets. When a trader goes short on XRP, here is what they actually do. They borrow XRP from an exchange. They immediately sell that borrowed XRP on the open market. The cash from that sale sits in their account, and they wait. If XRP falls, they can buy back the same amount of XRP for less money than they sold it for, return the borrowed XRP to the exchange, and pocket the difference as profit. But if XRP goes up instead of down, they are in trouble. They sold XRP at $1.30. If XRP rises to $1.50, they have to buy back at a 20-cent loss per token. If XRP rises to $1.80, they have to buy back at a 50-cent loss per token. And here is the critical mechanism. When XRP rises and short sellers start losing money, exchanges automatically force them to buy back, not at their preferred price, at whatever price is available right now. This is called liquidation. When one short seller gets liquidated, they have to buy XRP urgently. That buying pushes the price up slightly, which pushes another short seller closer to liquidation, who also gets forced to buy, which pushes the price up further, which liquidates another, and another, and another. This cascade of forced buying is the short squeeze. And in a market where available sell-side supply is already at historic lows, the price move that results is amplified dramatically because there is not enough XRP on exchanges to absorb $3 billion of forced buying without moving the price explosively upward. Step 2. The specific numbers that show exactly how loaded the spring is right now. Let me walk you through the exact data that CryptoQuant analyst Maartunn published on April 5th, because the numbers are more extreme than anything I have seen in recent months. XRP Open Interest. This is the total dollar value of all open futures positions in XRP. Right now, it is $951 million, rising from $892 million just recently. Rising while the price was falling below $1.30. When open interest rises while the price falls, it specifically means new short positions are being opened. Traders are betting more aggressively on further decline. They are adding to the short side of the trade. XRP funding rate. currently at negative 0.0010. Deeply negative. The funding rate is the payment that flows between long and short traders to keep perpetual futures contracts aligned with spot price. When the funding rate is negative, short traders are paying long traders. This happens when the short side is so dominant, so crowded, that the market has to compensate long holders to stay in their positions. A deeply negative funding rate means essentially everyone in the futures market is shorting XRP. The short side is dangerously overcrowded. Liquidation clusters. Above the current XRP price, there are concentrated clusters of short positions that would be forcibly closed if XRP reaches certain price levels. The total value of these clusters above current prices is $3.055 billion. The largest single cluster is $318.57 million, sitting at $1.35. There are additional significant clusters at $1.38 and higher. These clusters act like magnets for the price. Markets move toward areas of concentrated liquidations. If XRP reaches $1.35, it does not just hold there. The forced buying from that massive cluster pushes it higher, into the next cluster and the next, creating a cascade that can carry price dramatically further than anyone expects. Step 3. The historical precedent that makes this setup so compelling. Now let me show you what happened the last time XRP's derivatives market had this specific structure. February 2026. XRP's funding rate on Binance dropped to negative 0.028%, the lowest level in 10 months. Every metric showed maximum bearish positioning. Short sellers were overwhelmingly dominant. The community was panicking. XRP had just fallen to $1.11, its lowest level of 2026. What happened next? XRP bounced 38% in 3 weeks. The short squeeze triggered, the forced buying cascaded. The price moved from $1.11 back toward $1.50 rapidly. The people who sold into the maximum fear, who shorted XRP at the bottom of the funding rate cycle, got squeezed out violently. Now, look further back. April 2025. XRP's funding rate hit its previous extreme negative reading before the current cycle. Funding rates were deeply negative. Short sellers dominated. Everyone was bearish. What happened between April 2025 and July 2025? XRP went from approximately $1.60 to $3.65. An 82% gain in 3 months, the single largest XRP rally of 2025. Entirely fueled by a short squeeze that became a full momentum shift. The pattern is consistent. When XRP's derivatives market becomes this lopsided to the short side. With this much open interest at negative funding rates, the resolution has historically been violent upside as the overcrowded short position unwinds. Does history guarantee repetition? No, I will never tell you anything is guaranteed, but understanding this pattern exists, and knowing that $3 billion of short positions are sitting directly above current prices changes how you should think about what happens next for XRP. Step 4. Why April 8th tomorrow is the specific catalyst that could trigger everything. Here is what makes this setup so urgent today. Tomorrow, April 8th. The SEC submits its proposed penalty for Ripple's final settlement. Let me explain exactly how that connects to the short squeeze setup. The short sellers who are currently crowding the XRP derivatives market are making a specific bet. They believe XRP will keep falling. Their thesis requires continued bad news, continued macro pressure, continued regulatory uncertainty, continued fear. But the SEC brief tomorrow tells the market exactly what Ripple's financial liability is. And here is the scenario that turns this short squeeze from potential into kinetic. If the SEC's proposed penalty is modest and reasonable, the market immediately interprets this as a green light for Ripple to execute aggressively. $3 billion of short sellers positioned for continued decline suddenly face the most XRP-specific positive catalyst of the entire year. They do not wait to see if the catalyst plays out. They close their positions immediately to avoid losses. And when $3 billion of short sellers try to close simultaneously by buying XRP in a market where available supply is at a historic low, the price spike is explosive. The short sellers need bad news tomorrow. If they do not get it, the squeeze starts immediately, not gradually, not over weeks. Within hours. Watch April 8th. The SEC brief drops tomorrow, and it lands into a market structure that is the most explosively set up for a short squeeze in recent months. Step 5. The 2 risks that could prevent the short squeeze from completing. I believe in giving you the complete, honest picture. So let me tell you what could prevent this from playing out. Risk 1. Bitcoin breaks below $65,000. When Bitcoin falls hard, everything falls with it. Even a short squeeze setup cannot overcome a broad market crash driven by Bitcoin breaking critical support. If Bitcoin drops below $65,000 with conviction, short sellers who are losing money on the squeeze actually get bailed out by the broader market decline. XRP falls with Bitcoin. The squeeze gets canceled. Watch Bitcoin tonight and tomorrow. If it holds 65,000, the squeeze setup stays intact. If it breaks 65,000 with volume, the dynamics change. Risk 2. The SEC brief is worse than expected. If the SEC proposes a very large penalty for Ripple, that is a negative XRP-specific catalyst that gives short sellers exactly the ammunition they need to stay short. A large penalty does not immediately trigger the cascade of forced buying. It gives short sellers confidence to hold. The scenarios where the squeeze plays out fully require Bitcoin to hold, and the SEC brief to be neutral to positive. Both conditions need to hold simultaneously. Neither is guaranteed. But here's the important context. Both of these risks are known to the market. The short sellers who have piled into XRP know about Bitcoin. They know about the April 8th brief. They have priced in their fear of both, and they have still piled in aggressively to the short side. That itself is a signal. When the market is maximally short despite knowing the specific upcoming catalysts. The reversal when those catalysts disappoint the bears tends to be even more violent. Step 6. What this means practically for every XRP holder watching right now. Let me be completely direct about what you should take from this video. You are not a trader. Most people watching this channel are not professional futures traders with access to real-time liquidation data and tight stop losses. The short squeeze setup I have described is a trading setup. It rewards speed, it punishes hesitation, and it can reverse rapidly if the triggering conditions are not met. What this setup means for longer-term XRP holders is different and simpler. The fact that $3 billion of short positions are stacked above current prices means there is a specific mechanism for a rapid price increase that does not require new buyers. It requires existing short sellers to be forced out. That is fuel for a price move that is already loaded. It just needs a match. Tomorrow's April 8th. SEC brief is the potential match. April 13th. Senate Return and Clarity Act progress is another potential match. April 16th. SEC Clarity Act. Roundtable is a third. You do not need to trade short squeezes to benefit from them. If you already hold XRP, the $3 billion short stack is working in your favor as long as the catalysts are positive. If you are considering your position, the short squeeze setup means the potential upside from positive catalysts is amplified significantly beyond normal market conditions. The machine is loaded. The matches are being lit tomorrow. What you do with that information is your decision to make. Now I want to hear from you. Do you think the April 8th SEC brief will be the catalyst that triggers the $3 billion short squeeze on XRP? Type squeeze if you think the setup completes and XRP spikes significantly in the next week. Type trapped if you think the bears stay in control and the short sellers are right about further downside. And type watching if you are waiting to see the April 8th brief before deciding anything. Drop your answer in the comments right now. This is the most time-sensitive discussion this channel has ever had. I reply to every single comment in the first hour. Subscribe immediately. The SEC brief drops tomorrow morning. When it releases, I am posting a dedicated reaction video within hours explaining exactly what the penalty size means for the short squeeze and for the Clarity Act timeline. You cannot afford to miss that video. Subscribe and turn on the bell right now. Thank you for watching. I will see you tomorrow on April 8th, and I will see you in the next one.